In the massive, deep ocean of cryptocurrency, there are these giants moving silently beneath the surface. We call them whales. And when they move, they can create tidal waves. But who are they really? And what do they know that the rest of us don't? Well, today, we're diving deep to decode these giants. So why are we talking about this right now? Because the market is electric. Just last week, a mind-blowing $2.7 billion flooded into institutional crypto ETFs. Look, that's not just a little bit of market chatter. That is a deafening roar of capital telling us the biggest players are making some very serious moves. And it's not just a Bitcoin story either. We're seeing this bullish energy swirl around everything from Ethereum and Solana to even XRP. So with all this money pouring in, you gotta ask, who are the giants that are really steering the ship here? All right, here's how we're gonna break it all down today. We're gonna start by meeting these market movers, then look at how people try to track them. After that, we'll ask the million-dollar question, does any of it actually work? From there, we'll uncover the whale's real advantage and wrap it all up with a playbook you can actually use. Okay, first up, let's meet these market movers. Who exactly are these giants that are steering the crypto seas? So what is a crypto whale? It's actually pretty simple. It's any person or, any company that holds so much of a single crypto that when they decide to buy or sell, the entire market feels it. Seriously, think of them like the sun in a solar system. Their gravity pulls everything else around them. And this leads to something researchers have dubbed the Moby Dick effect. It's this powerful psychological ripple. When a whale makes a huge move, smaller investors, that's us, often react like a herd. We start panic selling or panic buying, not based on any solid strategy, but purely on emotion. It's a massive contagion of fear or greed. So if these whales have that much influence, it only makes sense that people would want to track them, right? There's this really popular idea that if you can just follow their footprints on the blockchain, you can predict where the market is headed next. And the most popular way to do this is by tracking what's called exchange flows. The logic is pretty straightforward. When a whale moves a massive pile of crypto onto an exchange, the theory is they're getting ready to sell. That's a bearish or negative signal. On the flip side, when they move a ton of coins off an exchange, probably into a private wallet, it suggests they're planning to hold on for dear life. And that's seen as a bullish signal. And here's what that actually looks like out in the wild. This is a real alert. It's showing nearly $46 million worth of Solana being moved onto an exchange. Now, for a lot of traders watching this stuff, this is a giant flashing red light. The alarm bells are going off. A potential sell-off is coming. So it seems simple enough, doesn't it? See the whale move, make your trade. But, and this is a really big but, this is where our story takes a sharp turn. Because we have to ask the critical question, is this whole strategy really a reliable crystal ball, or is it deeply flawed? Let's just put it out there plain and simple. When you see an alert like that one for Solana, is it a guaranteed actionable signal that you should dump your assets? Well, researchers at a firm called Presto decided to put this exact theory under the microscope. They crunched years of data plotting every single large Bitcoin deposit onto an exchange against the price action in the hours that followed. And the result? Well, you can see it for yourself. It's a mess. There's just no clear pattern at all. Now, they quantified this mess using a statistical value called an R-squared. For Bitcoin deposits and 1-hour price drops, the value they found was a tiny 0.0017. Now, just for context, an R-squared of 1 would mean it's a perfect prediction every time. This number is incredibly close to 0. So, let's cut through all the stats and put this in plain English. What this means is that a whale moving millions of dollars onto an exchange has basically zero predictive power over whether the price will drop in the next hour. The entire strategy that so many traders live and die by, it just doesn't hold up when you actually look at the data. So that brings us to a really fascinating puzzle. If whales aren't actually better at predicting the market, then what is their secret? What's their real advantage? Well, the answer, funnily enough, comes from the US Federal Reserve. Researchers at the Philadelphia Fed uncovered something absolutely stunning. It turns out it's not about prediction, it's all about timing and behavior. What they found is that whales tend to increase their holdings. They buy more right before a price goes up. And at that exact same moment, what are the retail investors, the so-called minnows, doing? They're doing the exact opposite. They're reducing their holdings, selling right before the big price jump they were probably waiting for. So, what on earth does all of this mean for you? We've just busted a huge myth and uncovered a much deeper truth about how this market really works. So let's turn all this insight into an actual playbook for navigating these chaotic waters. Okay, here are 3 principles to live by. First, learn to contextualize the noise. We now know for a fact that a single whale alert is not a reliable signal to buy or sell. It's just noise. Second, you have to resist the herd. That Moby Dick effect is real, and it feeds on our panic. Be aware of it, and do not let fear make your decisions for you. And third, and this is the most important, focus on the fundamentals. Base your decisions on the long-term value and the bigger trends of an asset, not on the frantic short-term twitches of a few big players.
Ultimately, the data tells a really clear story here. The real advantage isn't in trying to copy the giants, but in understanding the currents they create and the behavioral tides that pull on the rest of us. So that leaves us with one final question to think about. In a sea full of whales, are you going to learn how to swim with your own strategy, or are you just going to follow the tide?